The wildest thing I've ever seen happen in an insurance agency was we had an agent that was writing bonds with us, and the agent ended up taking the premiums that were paid by their customers, buying drugs with it, and then getting caught. So that was a little gnarly. Ended up doing some jail time, and had some reparations that were paid forward. But my name is Jackson Cromer. I'm with Bond Exchange in Charlotte, North Carolina, and I help insurance students do debts with Surety, and I'm an insurance dude.
Insurance dudes are on a mission to escape being handcuffed by our agencies.
How? By uncovering the secrets to creating a predictable, consistent, and profitable agency sales machine.
I am Craig Pretzinger.
I am Jason Feldman.
We are agents.
We are insurance dudes.
Happy to be here. I'm excited. Yeah. That was probably like year, I think, is the second year that I was here at the agency, and that one was fun. That was an interesting time. We had basically our carrier asking, "Hey, what's going on with premium payment?" and had to basically go through them and figure out how they were going to handle it.
How long did it take to catch it?
It was, I mean, that agency was writing premium or writing bonds with us for, I mean, years and years. But I think that the instance ended up happening probably within like 8 to 10 months. It wasn't a very long time. Yeah,
it's still a long time, right?
Yeah.
It's like you watch what like criminal behavior, and they'll start off super careful, right? And then they're getting away with it. And then in insurance, because everything's so low tech and it just takes forever. Yeah. It's like he's 7 months in and he's feeling good about it. He's like, I got my scam going, right? Exactly. And then he gets lazy and whatever. And just it's crazy that you can actually, like, somebody can, number one, it sits okay with them to do this in the first place, right?
Yeah. Like, but this is a logical thing that's going through my head, right?
It's just wild. Like, and then to think that it's not that you won't get caught.
Yeah.
Like it's remarkable.
Next thing you know, you show up at his office, he's laying nude on his table, smoking crack with a bunch of farm animals.
Yeah. And then the freaking FBI kicks in the front door.
Right.
And all the fun and games are over.
What was he doing?
I believe it was cocaine.
What?
I believe it was cocaine.
Yeah.
Correct. So he's living fast and furious.
Yeah. Fast, furious, nonstop, ready to go.
Oh, man.
Yeah. That one was pretty gnarly.
So Jackson, how'd you get into this thing? Like, how'd you get into selling bonds to crackheads?
The journey was a little different. I got out of college and I started actually working in a wilderness therapy company. So I was out in the woods in Asheville, North Carolina for like 8 days at a time. I was working with kids that struggle with mental issues, and I had recently been married, and we had our first son on the way. And it was getting to the point of just, hey, this isn't really working anymore. Like, you're gone for 8 days at a time. I can't contact you. What's going to happen? And I got on with
the perfect situation.
Yeah, it was a rough one, right? But I got on with Bond Exchange in 2016, about a month before our first son was born. And I think I started out here as a renewal underwriter. I had no clue of what I was doing or how to process really much of anything. But I came in and I really wanted to gain a better run. Exactly. Yeah. We're just kind of flying by the seat of our pants. But I wanted to learn more, and went through some underwriting designations, got a better understanding of what the strategy and mission of the organization was. And, we took it from there and really tried to accelerate the growth of the company when we launched the website. And that happened in 2016, 3 months after I started. A lot of iterations since then, a lot of change, a lot of growth, brought on probably 5 or 10 more folks, and, really continue to expand that footprint and build out what we're doing. It's been a lot of fun.
Crazy.
Yeah.
Crazy. So how have you been expanding?
How we've been expanding? A lot of it, we get a lot of inbound. I mean, it's a lot of folks that they don't know what to do with Surety, a lot of agents that they need help with understanding what the nature of these requirements are. And then we do have some some carriers that send us some inbound referrals, which is really nice. You can't really go wrong with word of mouth. It's really helpful. But recently, we've been really hammering away on our marketing, really been hammering away on some business development practices to grow that agent base. So they know who Bond Exchange is. There's some brand recognition, build the brand awareness. We've been going out to a lot of conferences too. So that's been a big change over the past probably 8 months now. We just did a little beta trial of it, did 4 last year. And I think this year we have 48 on the books. So 10x that for this year. It's nice. A busy travel season. But we've got a great team that goes out. I'll pick and choose kind of my top 5 or so, and we'll head out there to go visit some folks. I think, let's see here, first week or second week of June, I'll be out in Rhode Island, and then in Texas at the end of June. I think we've got one in Scottsdale. I think you're coming up maybe in August, but we've got folks that are heading down to Florida for basically 3 weeks. Get a little like mini vacation while out doing conferences. Wow. Should be a good time.
Do you personally have to go to those?
I don't. I'll kind of pick and choose. Yeah.
So, I was gonna say, if you got out of the previous job and smooth sailing for a while, and then all 48 days. Oh, by the way.
Yeah. But no, so I'll go. I think on my docket, I've got about 10 that I'm going to go to this year, and then we'll split it up. We've got a team that kind of rotates to make sure that we've got enough coverage to get out there where no one's getting their burnout on travel too much.
So Jackson, let's pretend that Mr. Jason knows nothing about Surety, and you were going to explain it to him. How would you walk him through that?
Absolutely. I think luckily with Surety, you'll have someone that's going to be coming to you with, I need this bond, like I need X, Y, or Z. And what I usually will start with is, okay, well, this person's coming to you. What's the industry that they're in, right? Are they an auto dealer? Are they in construction? Are they in financial services? Are they a mortgage broker or mortgage lender? And from there, it's who's requiring this bond of them. What's the point of the obligation? So you'll have a lot of these state or city or county requirements that will come up, and those folks will actually say, hey, XYZ contractor, you need to have a $25,000 bond if you want to do business in the state of California. Or in Arizona, like there's a lot of different license classifications in Arizona. That's a fun one. But hey, you're a residential builder, you need a $5,000 bond requirement. Boom, go. So those are my 2 big questions first is, what industry are you in and who's requiring the bond? From there, we can kind of get a better understanding of, all right, what's the bond amount? And then what is the underwriting information that we need to be able to process this quote for you? A lot of these bonds, they're underwritten based off of a soft credit check. So you got to kind of parse through the, hey, I need a social security number. A lot of folks don't want to give that to you. But there is a way to go about that process where, you're providing them with some of that comfort, some of that really understanding that you're here, you know what you're doing, and that you're there to provide them with a service and some help so that they can take care of what they need to do to get their business running.
What's the best ways to navigate through that part of the conversation?
Sure. When we do that, I would always let them know basically, hey, it's a soft credit check. It's not going to affect your credit anyway. And that, this gets stored in a secure location that's encrypted. Once it's in there, like I can't see it. So like it's there. I can see what it returns for me to be able to underwrite the account. But other than that, that's it there. Like it's tied away and it's gone.
Is it like other forms of bond? Like, do they, like with a 25,000, is there somebody that's investing 25,000 on the other side to fund the bond, or it's through the company itself?
Yes, not quite. So like with Surety, it's this weird 3-party obligation, right? So like traditional insurance, 2-party, you've got the insured and the carrier. With Surety, you have the principal, which is the insured or your customer. You have the surety company, which provides the financial backing. And then you have the obligee, which is the state, city, county project owner for your payment performance bonds that is requiring the bond of the principal. And what ends up happening is, in the event that principal defaults on their obligation. So let's say for a motor vehicle dealer, they sell you a car and they never give you the title. Well, that's illegal. And you can claim the bond to seek reimbursement for that loss. So you gave them a down payment of 10 grand for that car, and you can claim the bond to seek reimbursement for the 10 grand that you lost out on because they never gave you the title for the car. So it's a protection for the consumer for fraud and unethical behavior. It's a protection for taxpayers when it comes to these large payment performance bonds for federally funded construction work. So anytime those, a contractor walks off of a job or they do something that violates the terms of their contract, they go over time to complete on the contract and never actually finish the project. Well, a bond can be claimed to provide protection to the project owner in those cases.
It's interesting. So it's insurance. It's just not called insurance. It's called a bond instead.
Exactly. Yeah. It's a similar vehicle, just a different way that the claims pay out, because it's not a protection for the principal, for like your customer. It's protection for the consumers that interact with that customer, or a state body that has, I'm trying to think here, that has like citizens that need to be protected in the event. Yeah,
it's interesting. I wonder why they called it bond, because like bond is a financial instrument,
right?
Debt, right? So
exactly. It's definitely a little nuanced. It's definitely and that's one of the reasons I think it really throws our the agents that we work with. It can really throw them for a loop, because it's a lot different than any other product that they're dealing with. There's no other product that they have that's like, hey, I've got this weird 3-party requirement. I don't know why I have a 3-party requirement. I just have a customer that needs to get this taken care of. Like, how can you help me? And so they end up throwing it our way, and we provide them with some solutions and some technology to help make that process a lot faster, a lot more streamlined for them. So then they can work up the workers' comp, or they can work up the GL, or any commercial auto, or something along those lines.
Right. So this is like a front end. Like you could, if marketed properly, an agency could utilize this as kind of a front end offer, right? It's a lower ticket, something that everybody like a lot of businesses may need. So if you're marketing for this, you use this as the foot in the door, and then go after the GL, the commercial auto, their personal, and everything else.
Oh, absolutely. And that's one of the big things with the Surety that I see is, while it's not the biggest ticket item, it's really not. Like, I think average premiums for us, like $400 or $500. It's not breaking the bank, right? But it creates a really sticky relationship, because the underwriting and the information that you need for it, generally it's a little more personal information, like your social security number. In some cases, you may need a personal financial statement or a business financial statement, some things that folks generally like to hold closer to the chest. And so if get that information, create that bond, create that relationship, it usually allows the retention is generally pretty strong.
I think it's a good Trojan horse strategy, right? Because they have to have it.
Yeah. There's no going around that.
And then it's kind of a pain in the butt to get set up because of some of the requirements. So now they don't want to go elsewhere to do it again. No. And boom. No.
Exactly.
Then you control that relationship.
What industries pay out the highest commissions on bonds? Like who needs the biggest bond? Are all the commissions for all the bonds the same, or do some pay out more? Like if I was going to sell bonds today,
I would tell you to try to attack the biggest markets, right? I would start there, and it's going to be construction, it's going to be the auto industry, transportation, financial services, so like mortgage brokers, mortgage lenders, money transmitters, and then there's a big resurgence but big market opportunities in cannabis. Those are, it's higher risk, right? But there's not a lot of market availability. And if you're someone that has capability and carriers that can write it, it's open season. As far as the commission ranges, I see differentiation more on standard versus non-standard types of business. So like I can place this with maybe an admitted market, right? And get a standard commission anywhere like 20-30%. If I place this with something that's non-admitted, or have to go to a substandard market for it, well, it may be a little bit lower. But generally speaking, it's still relatively strong commission percentage outside of what you see in maybe some traditional PNC lines. But yeah, I would definitely, construction is gonna be the big one. That's probably like 60% of the market when you look at just from a premium volume perspective.
And how much are those premiums?
It can certainly range. I think we've written a few that are like, a couple 100,000 in premium. And then you've written a ton of them that are like 10, 15,000 in premium. And you'll have some that are a couple grand. It just kind of depends on what those project sizes are, what relationships you've established with those agents, and then the agents, what they've established with those contractors.
That's awesome. Are there any flags that go up if somebody needs like let's say construction? If somebody needs a construction bond, where's the first place that they're going to look? Or is there something online or some kind of like indication maybe early, like, hey, this company's going to need a bond?
You can, some cities and counties will release like bid specifications or requests for proposal. So you can basically kind of like pinpoint and try to attack that as far as like, okay, we know these projects are coming up. And while maybe I don't have, maybe like one of my clients, one of my insureds is not one of these contractors, well, I can market to like commercial contractors in those areas, right? And try to find them. But for us, again, we're just working with agents. So we will end up kind of trying to pinpoint some of the agencies or reach out to agencies that maybe have specialization in, construction risk or like, hey, probate or kind of estate type attorneys or things along those lines. But it just varies. I mean, it's so far reaching as far as the different industry categorizations that you can kind of, you don't necessarily need to pick and choose. It's there.
What kind of marketing tactics are working really well for some of your top agencies that are just dominating and selling these bonds? Like, what are they doing to bring in the business? Sure.
I think a lot of what I'm seeing our agents do, we see some on Google AdWords. Again, I mean, we've dabbled in it as well. It gets expensive. We actually ran a pretty successful like print mail campaign. I don't know. I don't feel like I don't want to be the last one to say like print's not dead, because of a little bit, but it works out really well. I've seen some really successful strategies there. Also, I mean, any sort of like kind of affinity marketing too, where you can get in with some form of either a distributor or something along those lines and create those relationships, has been really, really effective. And then too, I mean, the SEO game is definitely up there. I think that, having some really quality curated content that demonstrates an agent's ability to like serve as an advisor. And this is really, I mean, if we're looking at digital marketing, this is like kind of some of the areas where I think I've seen some of our agents try to create some specialization in. But then too, we have a lot of folks that they don't have a very up-to-date website. They don't have a way that clients can really contact them through their website outside of, hey, here's my phone number, but building out like, hey, I've got a chat feature on my website that'll connect you to one of the CSRs in our office. Sweet. Or I have an online submission tool or something along those lines. We have like some form of integration that's built in there. I think those have been really, really key.
Yeah. I think a lot of agents rely on their care, like especially captive agents will rely on their carrier created page, but it's pretty generic. It doesn't really, it's not optimized to generate leads for the agent. So I think that's important stuff that you brought up, where they can create a side thing. Obviously, you can't put your carrier's name in it if it's your own thing, but you can have some other thing and create SEO in these areas that people aren't really spending money on. Because sure. I would, auto insurance, home insurance, that's going to be tough to rank in. But something like, construction bonds for your thing, like that may be easier, right?
Right.
Same type of thing. We used to run ads for motorcycle insurance because it was kind of like the foot in the door, right? But then everybody started doing that, so now it doesn't work anymore.
You got to shift it. Yeah.
You just got to shift to something that nobody else is doing, which ironically, most people don't do anything until they see everybody else doing it. Right.
It's this weird catch-22 in it.
Yeah.
Yeah. But, I think I like that a lot. And, you look at, all right, what's the difference between like, obviously what like captive agencies are doing. And then we work a lot with independent agents, and you kind of see what the development and what those trends look like between, all right, hey, this is where the progression is, right? Is this like with the captive, you have the big name, a lot of leads that are driven from the carrier side, but like with our independent agents, I mean, it's all on them. But you get to see some cool differentiation in how they're going about those tactics and what's changed and what they're doing that's allowing them to be successful. I think a lot of what we've seen, especially, I mean, we work with a lot of small kind of more mom and pop agencies, but embracing what they're doing on the technology front, it's been a big game changer for them. Where like, hey, I have a website that is updated constantly. I have chat features. I have the ability for, COIs to go out on demand, like whatever it may be, they're doing things that are allowing them to kind of get their foot up. They're creating that tech stack that's allowing them to continue to elevate themselves. And it's just been a really interesting development, because we are trying to be at the forefront of that on the surety side of things to make sure that we're able to provide that service to our agents and to our customers, but then seeing that they're doing the same thing. Sweet. That's awesome. And it's a win-win for everybody.
I love that perspective too. I wish more agents had the perspective of, hey, like we're all selling the same stuff. Who cares? Like, who wins,